we were talking about with the S curve in Bitcoin. So
Oh yeah.
what I meant by that is when you like an S curve in Bitcoin is like Metcalfe's law, right? So if you were to look at like the stock to flow chart in Bitcoin, it would show something similar to that. So what essentially you see is a sharp initial third rise, and then you see sort of a bit of a tapering, right? So what you see is up and then smoothing and then a parabola. Right? That's like the tip how Metcalfe law
Okay.
plays out in adoption. So kind of we're probably in a area on the S curve of dampened volatility. Um, but again, that stuff takes years to play out. So what people care about right now is the more immediate time frames and what we're looking at the chart. Uh, yeah, so right now, my opinion on current price action, I don't really have a strong opinion one way or the other. It's hard to get super bearish on the lows breaking, but um, I think some of the structure here is lost, right, based on what we saw after FOMC. But I don't know if I think if I were to get like open a massive short on the macro, I would want some type of lower high, right, to trade into.
Yeah, you should just wait on a relief rally at least to open up a short on the macro.
Yeah. Well, it's a good example of like
But
for anybody
no. Oh, okay. Go ahead. Go ahead.
yeah, I was just saying that like for the invalidation level I was looking at was just hit on the chart. So you know
Yeah, I wanted to bring that on. Yeah.
yeah, so uh, and it's an important point because like just because if you have an invalidation level and it gets hit, it doesn't automatically mean that that that's a great opportunity to trade in the other direction. Sometimes it just means that there's
Yeah.
not there's not a great trade to be had. Um, and that's kind of the way I'm looking at the market right now. Like I'm not, I don't have a,
Yeah.
yeah, I don't really have conviction one way or the
The
other.
the the yeah. The problem right now is that you cannot really short it because you really risk to get squeezed, but you cannot long it either because it just broke through an invalidation point. So it's like you just need to hold and wait to new information. I guess that would be my guess.
Yeah, I mean, volatility is definitely picking up, right? So it's like, well, I mean, I guess the fear is like a big capitulation candle, like March 2020. Um, I think it's definitely a possibility. Um,
You're not there yet, I guess.
yeah, but but I guess you do have that risk, right? If you were to, because like you know, even though my personal invalidation was hit, um, you know, there are a lot of you could certainly make a case for finding a long somewhere in this region. I mean, right? It's like very obviously a area of
Yeah,
support, right? I mean, price obviously reacts off it.
I've always I've always been looking at 28K and see what type of reaction we can get there. But it's not a trading idea or a trading plan by any means. It's just I've been looking at 28K for the last 6 months at this point. So you know, I just need to see what happens there.
Yeah, I think a lot of people are looking at much lower prices right now, and I did a video on the 200 exponential on the weekly, but
Oh yeah,
um,
sorry. Yeah, watch that.
yeah, I think. By the way, I think if the lows do get violated in this would be a great place to buy Bitcoin for a long term position at the weekly 200. But it's like that. Just the fact that like everybody's expecting that makes me think it's not going to happen.
Yeah, I
And
mean,
it's like, how do you
usually
quantify
it
everybody?
gets
Yeah,
front running,
how do you
or
can't really
it
quantify
certainly should.
everybody? Yeah, but it feels like, and maybe that's just trading error on my part because how do I know what everybody expects or what everybody wants? Um,
No, yeah, of course.
yeah, I do think if price hits that level, then definitely be a good buy.
You know, if you don't look about the moving average, you know, if you just look at price, there are at least some good structure or point in price around that level. Maybe slightly below that, but you know, around 21, 20K, there could be a good level. Of course, it doesn't really play out with the moving average, but it could be.
Yeah, I mean historically the 200 weekly has been just a great area to buy. Right here, back in when it first populated, right there.
Oh
But
yeah,
you know, but the problem is like here you also had you know you had some price structure to base off as well, right? Where you had some, you know,
I
at
I
least,
just
yeah.
yeah.
Um, but here,
No,
price
I
move.
was I was about to say that.
Go ahead. What's up?
No, I was, like from an investment standpoint, yeah, absolutely. It's a great point to load up on position for the long term. But again, it comes down to what are you doing? Are you investing? Are you trading? Because if you're investing, buying some spot positions at that level, it could be a great play. Maybe you're gonna face a little bit of a time underwater, and in the grand scheme of thing, it's not gonna be a great deal like 2 months after that. But if you're trading at, margin, it could make all the difference in the world. So it's a good point of reference, the 200 weekly moving average. But again, it depends what kind of a play you're planning to, quote unquote, to play around that. Are you building up long-term positions? Are you planning to play it on margin trading with a decent amount of leverage? So it's always subjective, right?
Yeah. So I feel like this is an area that like I probably don't mention it on videos, but and I forget that it's important to mention it. But if I like right here, right, like I identified this area, right, you can see that this area here, this area there, both obvious reactions for price, right? These
Yeah,
weekly order blocks, again, not an exact bottom on the market, but a clear reaction, right? Also here. Um,
yeah,
so when I say I'm like longing a position like that, people, I kind of inherently implying that I'm waiting for a setup on the lower time frames, right? So I remember trading this, right? So I had this weekly order block identified here, which is pretty much this down move here, right? Price trades
yeah. The
into it.
overage, yeah,
It actually would have been a good trade just to buy it outright. If like, and the reason why it was a good trade just buying it outright is because price moved so violently into the level, right? And had price efficiently built up to that level, wouldn't have been as good of a buy. But essentially, I did trade that level, but I didn't trade that level until here. I
okay.
price came down to the weekly level, and then I traded this this area here. So price broke out the
Well, I mean, conceptually, it's not wrong because you are identifying a level which is relevant on a higher time frame base, and then you're trading it on a lower time frame confirmation. So, I mean, it's a good edge just because it didn't really pump a lot. But if you look at the spike, the last spike it does before crashing down, it went up above the previous relevant height. So again, it's a good long.
Yeah,
These
but
are
this, I mean,
purely
yeah, this is a
trading
good.
liquidity.
It's also a good example of like if you're not actively managing your trade like you should be, this would have been a losing trade, right? Like,
Oh yeah, of course.
so like,
Okay.
so this is a good entry, right? So basically, you're at a high time frame level, right? So you know you're at a high time frame level, and then the lower time frames. Again, the 4 hour is not a low time frame, but it's low relative to a weekly. And then so the
Yeah.
4 hour changed around. I traded this clean break here, and then you get a pretty almost immediate reaction, which is nice. That's why I like trading those kind of levels because they tend to do that if they work out.
Yeah.
Um, and
Yeah.
but here, like, okay, so this is a good example. If you just entered there and then thought this was going to be a bottom, right? You don't close until this candle here, and then you're like fuck, and you close at the you know the bottom of that candle, or something like that. Or but if you were managing this dynamically,
Yeah.
um, there were a lot of opportunities, right? Because so you have this high here, and price runs up to that high. You could have taken profit there, or it's still running up above this high as well. Both of them. There's your ideal take profit, but then also, you could have added risk at this retest right here, and then when price, you know, gets up here at this level, comes down, sets this low. Now, when you first entered this trade, maybe your stop was down here, but you can move it up to here, especially when it comes up above these highs here, right? Because whenever you get this formation in price, right?
Yeah. It's a ring failure pattern. So
Right?
yeah.
Yeah, you get this low here, price runs up above the highs. This is a great place to bring your stop at that point because if it runs up
Yeah.
above there
Absolutely. Yeah.
and then comes down, I mean, this is going to be an apex, which it ended up happening. Um,
Yeah, and I mean, you can even judge it by the velocity after the swing failure. Even if it's not really, uh, you know, pushing through the level a lot, but that's more than enough. And then you see the one, two, three, four consecutive candles. That's basically conviction on the part of the sellers that are all just down candles. So at that point, yeah, it would make sense to move your stop not only at break even but in profit because you do know that if price fails you know to close above that level, it's very likely that it's gonna crumble back down. Yeah, I get the logic and I totally agree with that. Yeah.
I think another thing that's helpful for a strategy is like to create some type of trade entry around like what you do when the low probability scenario plays out, right? So, um, so the way I was looking at this, right, when I was trading that, right, like I didn't know that that was going to be, the way I was looking at it, right. I mean, you have a higher high on the weekly, come down, hit this obvious weekly level, and then the low time frames start turning around at that level. Your first inclination is not to think that it's going to break to the downside, right? You don't.
Um, I mean, it's hard for me because basically I was well, I was watching below 28K since that thing that you just described happened. So you know,
Oh, since this candle happened here.
no, it was a much higher time frame. I guess I don't know if it was a weekly or the time frame you had before, essentially. When you had that, what you call higher high, yeah, this one, yeah.
Yeah, I mean it technically
Yeah,
is a higher
so
high, but yeah, it's
that one, yeah.
yeah, but
It
clearly,
is, yeah, it is. The problem, yeah, the problem for me back then was I think I recorded a video on that. It's one of the few videos I recorded, but that double rate we had there, it was a news. I guess it was interest rates. I guess that was right around the time the Fed started to talk about it. Rate hike, and yeah, after that, the price action broke structure to the downside on a relative time frame, like a 4 hour or something like that. And I was like, okay, this is bearish. At this point, this is bearish, and we're gonna trade lower. And of course, you cannot really put a time horizon on that, but that's basically when I shifted my bias on the bearish side. And I guess it was around middle of November, end of November, something like that.
so you were
And
necessarily
again,
looking.
it's hard.
Yeah, so
It's hard to be a bear in a market like this, but sometimes you just need the courage to be.
so were you necessarily looking? So that's interesting. So you saw this happen, and you were looking at 28,000.
Yeah, essentially, yeah. This is yeah, weekly time frame. So yeah, exactly, the blue line that you have right there. If you go on the daily, when I saw that, I was like, okay, this is bearish. It's really, really
Yeah,
bearish
it's
because
interesting
we made an
because
all-time
yeah,
high. We just
it's interesting because that's a pattern that I look for on like the low time frames. But then like obviously this is a scenario where you know my bias is affecting my opinion on the higher time frames. You know, like when I
yeah,
see an
me too.
apex like
That's a
this
pattern I
break,
look.
I'll look for if this was price is price, right? If this was an hourly chart and I saw this formation, I would naturally look at these lows. For
Yeah, you
volatility.
know what? You got the blue line there, right?
Yeah,
So now before the blue line, you have some sort of a dodgy red candle, a shooting star red candle, just the candle prior to the one where you put the blue line on, right?
yeah.
So if you can put a line on the top of that candle, on the week high of that candle,
This
the
one.
upper shadow, yeah, exactly.
So
Essentially,
that was,
when I
by the
saw
way,
that,
that candle represented the week the first Bitcoin ETF went live in America. Isn't that great? It's
so I mean,
very poetic.
it, it's kind of in hindsight it's kind of obvious, but when I was looking at it, I was like, okay, we basically just rated the previous all-time high, and we just had a double rate on news because that was the thing about Jay Powell announcing the rate hikes, and then we broke structure. Now this is a weekly time frame, but on the daily it was even earlier, and I was like, okay, at this point this market is kind of fucked. At least it's going to trade down below 40K, and from there, if it doesn't recover pretty quickly, it's going to trade below 28 because there is an absurd pool of liquidity below 28.
Yeah, no doubt. Um,
So of course, it's been like at this point 6 months, something like that, and it's not like you can trade the market like that, but it's just some sort of a bias that you can have, which is why I have never took uh, huge long positions into Bitcoin ever since. And actually, the funny thing is that at a point I was so convinced of my bias that I was shorting Bitcoin on the hourly time frame around 66K, and I closed that short at 58K for a small profit. Now you might say, okay, so if you had the very strong bias, why did you close that? Well, because I don't trade the macro essentially, and I